good morning, fellow traders, and welcome to today's live webinar trading session. As you guys know, today is June 7th, 2024. We're anticipating some data coming out, the jobs numbers, which, we're going to talk about in a little bit. Those numbers should be coming out really, really soon. And for those who are familiar with TradingView, like if you don't know what time these events happen, there's a feature on TradingView where you can see the calendar. You can either plot it on your chart or you can click on this calendar icon right here, and it could take you to this screen where you can observe the different data that's coming out on a particular day. You just click, in this case, June 7th, and then it'll take us to where we are right now. So then we have the non-farms data coming out in 27 minutes right now. So we have 27 minutes until that announcement comes out, the unemployment rate, all that stuff. And then we do have ECB President Christine Lagarde speaking at 9:15. So it's a pretty busy day, some risk events in the trading session, but I'm not going to talk about that. I know that's Marvin's cup of tea, but I hope all is well. It's been an interesting trading environment. We haven't really had much price action or as far as expansion moves. They'll happen once every blue moon each week, but for the most part, price is traveling in a tight range. But anyways, hope all is well, and good morning, everyone. I just wanted to say that before we move on. So yeah, good morning. Well, yeah, good day, Joe. Thanks for coming. Good morning, Adam. Good morning, Robert. Good morning, Mark, and Naomi, and everyone else. All right. So with that said, let's move forward. I'm going to talk about the Dixie for a little bit before this announcement comes out, because I think it's important for us to get a top-down technical perspective on what may be taking place on the Dixie. Now, if you can look at the Dixie, which is the US dollar index, right now we're currently looking at the daily chart, and you can really see for the entire month of the entire year of 2023, this asset, the dollar, has been really traveling within a range, really, for the entire year. January is right around here, this red candle right here. So you could pretty much say that for the most part, it's been trapped in a range. And, we have the high of this range right here. Let me start right here, and then we have the low of this range right around here. But for the most part, it's been trapped in a monthly range. But if you look at the way price is forming now, it looks like there could be another attempt to test these lows. So then right now we sort of have a bias to the downside for the dollar based on what we see on the monthly, but it doesn't mean it's going to go straight there. Price typically corrects, and there's expansion moves, there's corrections, there's consolidations, there's breakouts. But overall, we feel that price sometime this year, maybe for the next few months, we're going to see price slide a little bit lower to test these lows down here based on what we're observing. But if you go down to the weekly chart, okay, this is the weekly chart, and for some reason it didn't show my horizontal lines. Let me make sure this is kept on here. Let me make sure this is visible on weekly and daily. And for this, we can get rid of these right here. And make sure this is visible on the weekly and daily. And I'll just keep that. All right. So then let me just go down to the daily. The weekly. Okay, so on the weekly, we can see here that price has been, consolidating in this range. It's been a pretty interesting, difficult environment for the dollar, especially if you're like a long-time investor in currencies like the dollar, because it really hasn't gone anywhere. But for the most part, we do see this range defined, and we do see price could be making its way lower. It's sort of hard to tell here, but we'll get more clarity once we go to the daily chart, which we talked about, I think, earlier. It could have been either last week or earlier this week. We talked about what we're anticipating. So then right here, remember what we said right here on the daily chart, price was respecting this range. We had this low right here, and then we had the high up here. And what we said is that we're waiting for a breakout. If price breaks to the upside, we'll be looking for a pullback to retest and then buy. But if price breaks to the downside, we'll be looking for a pullback to retest and a sell. And that is exactly what took place. Price broke to the downside. We did get a retest. And then now it looks like price wants to slide lower, which is sort of similar to our bias that we had on the monthly time frame. We're expecting dollar weakness, even though anything can happen. The Fed can make a decision that can cause the dollar to go the other way. Remember, what drives price is really monetary policy, interest rate decisions, yield differentials. Like all of that helps to drive sentiment in a particular currency. So then in this case, we see that the dollar looks like it may want to slide lower. However, we do have some demand right here. So then let me just draw that. Now we do have some daily demand. And I think I may already have this on the chart. I think I may. But anyways, let me just draw this in right here. We do have some daily demand right here that we have to really pay attention to. But for the most part, we do have a bias to the downside. Now, let's go down to the 4-hour. Okay, this is the 4-hour chart right here, and it did exactly what we was planning. Price broke down, retested this structure right here, and then it started sliding lower. So then that's what we were anticipating anyways. It did exactly what we thought it would do. So then let me clear all this up right here. Well, I'll just leave this here. Let me just clear this up right here. We don't really need all of this stuff. But yeah, we're in a new phase or new period right now. Okay, so well, I'll just move on. We don't need to focus on that. Okay, so right now we're looking at the 4-hour chart, and we can still see that the 4-hour chart is still in a period of consolidation. It's in a range. So then when price breaks this support or this demand, then this demand right here becomes supply now. So what we could do right now, we could change this to supply. So then let me just change this to 4-hour supply. And at the bottom right here, we do have some demand. So then right now, you could say, hey, we do have some 4-hour demand right here. So then the dollar is really stuck in consolidation for now. Let me do this. Even though we did get the pullback, the retest, and now price bound is heading lower, but it tested the lows, came back to test the highs again. Now it came back down to test the lows again. This tells us that we're in a period of consolidation. It can either be accumulation or distribution. We don't know. We have to wait to see what the Fed tells us before we decide on how we want to play this. But if I'm a betting man, I'll go with the bias that I saw earlier. So in other words, if price does break to the downside, if we get a break to the downside upon that announcement, because that announcement is going to happen soon. We see this right here, the non-farms and the unemployment rate. If we do get a break to the downside upon that announcement, then what we can do is simply wait for price to retest this area. What was once support becomes a resistance, and then from there we could continue to trade this lower as we expected. And that's what I'm banking on right now for the dollar. Anything can happen, but no, that's my sentiment. That's my bias for the dollar for now. And we may just see price maintain its range. We could see some information that can cause price to break to the upside. If you look and if you zoom in, let me just zoom in to this consolidation. We could see that for the past few candles, we've been really moving sideways. These are the past 4-hour candles. It's really been moving sideways. We haven't really been going anywhere. So then what you can also do, you could set a limit. You could say, okay, we have this high right here, and then we have this low right here. And you can wait for price to break these limits either to the upside or downside on that smaller time frame. So in this case, we'll be looking at something like the 1-hour time frame. And we can go there now. Let's go to the 1 hour. And this is the 1 hour. And what we could do is simply wait for price to break this level to the upside, wait for a pullback, and trade it up to the highs. In other words, something like this. Let me just show you guys. I want to make this real quick. You can simply wait for price to break this high. As soon as that happens, we'll wait for the pullback, and then we can trade it all the way up to supply, because we know this is supply, and we know that this is where the sellers can come in to maintain this range. But yeah, that's how we can approach these charts for today. And this is what I'm looking for. This is what I'm expecting the dollar to do. And you already know that if you're buying the US dollar, you'll be selling something like Euro USD. And if you're selling the dollar, like in this case, you'll be buying Euro USD, or you'll be buying 6E, depending on what you're looking at. But yeah, this is what I'm expecting for the US dollar. It can give you an idea of what the possible sentiment could be if these things do happen, these different scenarios. But yeah, that's pretty much it for the dollar. That's my analysis. Right now we're in wait and see mode because price is in a consolidation phase on, but really on all the time frame, really monthly, weekly, 4 hour and 1 hour is in this period of consolidation, which can make it kind of hard to figure out what price wants to do. These are some hard trading environments. So just know that. That's why good risk management and money management is so key. It's paramount. It's very important for your success as a trader. But yeah, that's pretty much it. I don't have much more to share with you in that regards. But what Marvin's going to do right now is talk about the non-farms payroll. I know that's going to come out soon, so I'm going to pass the mic over to him, and then we can come back and look at these charts later. All right, so yeah, good morning, everyone. I'm going to do my best to sort of briefly provide an overview of the non-farms payroll, what to expect, and why today's non-farm payroll eventually came out to be very important. Because you remember earlier this week, the market was focused on central bank rate cuts, central bank monetary policy. And of course, in some way, the market is still focused on it, but not in the way it was earlier in the week. Because you remember on Monday, we talked about how we have 2 or 3 central banks set to release their monetary policy statements. Actually, we had quite a few because I forgot about the Reserve Bank of India. But we had the ECB, the European Central Bank, that was already pretty much set to cut interest rates by 25 basis points, which they did. And we had the Bank of Canada, which was the day before, and they were close to cutting interest rates. No, they actually did. They actually cut interest rates. The Bank of Canada did. So you would have thought that the market would have responded in a robust way for both central bank rate cuts. But as you can see, even on yesterday, when the ECB decided to cut rates for the first time in 5 years, we didn't see that huge of a reaction. It's as if the market wasn't concerned or focused with that. So that let us know that the main focus of the market was on U.S. data, was on this jobs data, non-farms payroll, because they know that whatever the non-farms payroll or the labor market growth numbers come out to be, that would impact Fed interest rate decisions. And we know that the Federal Reserve Bank, even though it's a bank primarily to sort of control the U.S. or regulate the U.S. monetary policy system, the Federal Reserve Bank is the global driver of borrowing costs around the world. Yields, interest rates really move based on what the dollar would do, because you got to keep in mind that everything pretty much traded like commodities is denominated in US dollars. So other central banks will adjust their monetary policy, will hike or cut interest rates to make sure that whatever the yield differential is between their country and the US is at a fair level where they're able to do business and trade and still have a growing economy. So then the Fed, and what the Fed does, really does drive global sentiment. So it's as if the market said, forget what the ECB is doing. That was already priced in, and they sort of confused the market and did a switcheroo and pretty much said, yeah, we're cutting rates this time, but there's no guarantee that we're going to do it any other time in the future because we're going to see inflation pick up in 2025. So it was as if the market was like, then why even signal or why even cut rates if you know that the inflation hasn't still been tackled, that that inflation is still sticky. So then that's a whole nother topic. We'll talk about the year a little bit later. For now, we're talking about non-farm. So then ever since that happened on yesterday, that let us know that the market was more so focused on non-farms. We didn't see a complete move. And there's a reason why the market was focused on non-farms. The focus changed throughout the week as we began to see certain data come in from some of the quote unquote tea leaves that can give us an idea of what the Friday's labor market number would be. So then what do I mean by tea leaves? And I'm going to show you right now. So then what I'm going to do, I'm going to bring up the web browser real quick. And I'm going to go to a few websites. Let's just do this. Okay, yeah, let me change this right here. Okay, so yeah, for the sake of time, I'm going to go to a site. Some of you guys know about it, Trading Economics. Let me just do this right here, Trading Economics, which is a site that you can go to that is an aggregate of all the global macro data that comes out every month or every week. So then you can see that right on the homepage, it says U.S. job growth seen relatively steady. And of course, it says the U.S. economy is set to add 185,000 jobs in May. So then that is the forecast. The forecast that's out there among market analysts is that the U.S. economy will add roughly 180,000 jobs, between 180 and 185,000 jobs for the month of May. So then, that's slightly higher than what we saw in April. But earlier this week, we had a series of data that came out that suggests that the labor market may not actually be getting stronger, but it could actually be cooling. So then what I'm going to do, I'm going to touch on a few of those right now. So then let me do the search, and let's go to job openings right here. U.S. job openings, or the JOLTS data, which is job openings and labor turnover data. And you can see here, like, even if you look graphically at this particular bar chart, you can see that job openings have been sliding somewhat from month to month. Like, it's been, at its highs from August of 2023, and on average, it's been sliding lower. And in April, it got down to only 8.06 million. So the market consensus, for now, is about like 8 million. I think it did come in, the jobs openings declined by 296,000 from the previous month to 8.06 million. That was actually the April reading that came out on Monday or Tuesday. It reported that job openings have dropped to 8.06, all the way from 8.36. So then that lets us know that the labor market could be cooling. And if so, then that would build the case for the Fed to feel comfortable cutting interest rates. So then that came out this week. So then that's our first set of data. So then what else did come out? Okay, we had the ADP, the automatic data processing private payrolls number. This is the ADP employment change that came out on Wednesday. And you can see here that the ADP number showed that private payrolls, there was only 152,000 jobs created in the month of May of 2024. And the expectation was for 175,000 jobs. You see, this was the forecast, 175,000, but we had a number a lot cooler than that, 152,000 from the private, ADP payrolls number. So then this was another, indicator, or another, set of tea leaves that let us know that the labor market could be cooling. So then as this data continue to come out, it caused the shift to now lean towards the U.S. labor market data, because there's a possibility that the Federal Reserve Bank may be able to readjust their rate cut odds and the pace of rate cuts, and maybe price in an additional rate cut this year. Because at the moment, the Fed only has one rate cut, or the market is pricing in only one rate cut this year, and possibly a half, like a 50-50 chance of another rate cut but there's not as many basis points of rate cuts priced in 2024. So the market is looking at this labor data because they know that it's a huge contributor to growth, but it's also a huge contributor to inflation. And if we see a strong, sturdy, tight labor market, then that is inflationary, because the more people you have working, the more people that are getting paid, the more frequently they'll be able to shop and spend money. And you got to realize that consumption not only drives growth, but it also drives up inflation. So then the ADP numbers came out cooler than expected, only 152,000 jobs added versus the 175,000 that analysts had expected. But we not only had that set of data to look at, we had our ISM PMI numbers from both the manufacturing and the services sector. So then let me see. Okay, let me type this up right here, ISM. The manufacturing, and let's go to the employment subcomponent, because within the manufacturing report, they have different, subcomponents or sub-reports within that PMI. So then, as you can see here, which is interesting, we had a pickup in manufacturing jobs. We saw manufacturing jobs improve. Now, what I want to point out is that the U.S. economy, even though years ago it used to be a manufacturing hub, right now it's not. Most of our manufacturing has been exported overseas, and we're more of a services-based economy. So, like, manufacturing is only 25% of the U.S. economy. It's the services sector that is the most, the U.S. economy receives most of its growth from. The services sector accounts for about 70% of U.S. growth and U.S. expansion. So then we can see here that there was jobs growth and jobs creation in manufacturing. But let's see what the ISM services says. Let me see if we can. That is okay. Let's see what the ISM services. ISM. Let me do non. Yeah, they got services right here. ISM services, employment, and we can see here that ISM employment index showed a slight improvement in May 2024, rising to 47.1% from 45.9. So even though the numbers rose, this number came in below 50, which is contraction. So then on the services side, we see that jobs growth or in the services sector declined, or the employment index declined. We didn't see any jobs growth in the area. Well, we did, but what it shows is that the services employment index is contracting, whereas the manufacturing employment index is expanding. But you got to realize this number, it consists of a larger share of the labor market. So then really it would cancel out whatever jobs growth we did see in manufacturing, this contraction here of 47.1. So then we still see signs of the labor market potentially cooling. So then all eyes have been shifted on Friday's report to see, okay, are we going to see a number less than what many analysts had anticipated? Is the ADP private payrolls a leading indicator that we'll see a strong drop in jobs growth this month or from last month? And would this be enough? Would it be a significant number that will push the Fed to sort of get back to the table and readjust some of their perspective on monetary policy and rate cuts? So then we know that the Fed central bank monetary policy meeting is coming in a few days. I think it's on the 12th, or I can't quite remember, but it's coming up in a few days. So then this is why this is important, because if the labor numbers come out strong, then of course that will build the case for the Fed to maintain their higher for longer, to sort of keep rates normalized or keep rates high. But if the jobs growth number comes in smaller and softer, and with all the other tea leaves that came out earlier this week pointing to a cooler labor market, then this may give the Fed the green light to say, okay, then it's okay for us to also consider picking up rate cut bets, just like the other G7 central banks have started to do. Yeah, and if they do that, then just know that, even what I described technically, we'll tend to see the dollar sell off. So then, when we looked at the monthly chart and we're anticipating that could be due to what is fundamentally happening, as far as these numbers and what the Fed could potentially do. But you could sort of read in advance what could happen technically when you do top down. So then, it could contribute to the dollar weakness, the US dollar weakness that we talked about before. So I know we got a few minutes before that announcement.
So yeah, so what I want to do, I just want to show just how the heat map is before the announcement. You can see that, of course, the U.S. equity future indices are pretty much flat. They're just waiting for this non-farms data to come out. But you can see here that on the commodity side, which trades pretty much 24 hours, you can see that our commodities are definitely getting hit today. We're seeing them bleed lower. It's not due to the dollar. You see that the dollar has been pretty much flat. But could this be a sign or a harbinger of global demand and global growth slowing down? When you see a sell-off in commodities, that can be a sign of fear, saying we need commodities to be cheap in order to continue trade, to continue business activity as usual, because that's a way to kind of engineer some business activity and get business activity growing if we have cheaper commodities or cheaper raw inputs. So we can see here that it's interesting that for today, you not only have the soft commodities selling off, but the hard commodities selling off. The only one that's doing different and is diverging is oil. Oil is diverging. We see that oil is picking up and moving to the upside. So then it's kind of hard to say. We still get that mixed picture, but what's been interesting is that the other hard and soft commodities, our precious metals, are selling off. We can see Dr. Copper here in the negative territory. So is that a harbinger that the health, the diagnostic, like when we diagnose the health of the global economy, are there reasons to be concerned? Are we seeing escalating geopolitical tensions that will create some level of sell-off, or where people feel like we need cheaper commodities in order to kind of stimulate global expansion and business activity and global growth? So then that's interesting what we're seeing now. But we got to also keep in mind that this is a Friday. So then we see, sometimes you do see traders take profit on Friday. But I think some of this sell-off could be due to what we saw with the headlines coming out of China, with them choosing not to buy gold reserves. And they've been doing that for the past 18 months. Like every week, every month, they've been buying more and more gold. And of course, we could see that the market as a whole could be following suit and choosing to sell and take profit, because they're like, if the red dragon of China is pausing on buying commodities or buying gold, then there must be something. So then we see all of these impacted. So then that could be it as well. But let's go to crypto. Yeah. I know we got one more minute.
Yeah, less than 1 minute.
Yeah, less than 1 minute. So then we see here that the heat map is showing, while commodities, while gold, legacy gold, traditional gold is selling off, we see digital gold picking up and going higher as well. So that's pretty interesting. So then let's go to daily FX, this economic calendar, to see what these numbers would come out as.
There's a calendar also on TradingView.
Yeah. I wonder, should I go to that calendar, the calendar on TradingView? Let me just do that real quick. Okay, let me go to the TradingView calendar. I never looked at that calendar.
Yeah, you have to click on it first.
Okay, yeah, let me just do that. Okay. Let me do this, share.
Oh, wow, it popped up.
Okay, you can see right here that the dollar popped up, which means that the number must have come in strong. And it's interesting that the commodity market may have saw that or knew that beforehand. So let's see, okay, what is going on? Let's go to Friday. Non-farms payroll, wow. You see this number? 272,000 jobs added. That is a very strong number. Unemployment rate picked up to 4%, which is something, we want to see, but this is interesting. Yeah, but I'm going to have to go back to the other calendar, because they don't have all the other indicators like wage growth.
Yeah, here, unclick that. Yeah.
Okay, let's see. Okay.
And then go to the 7th.
Okay, do they have? Yeah, okay, average hourly wages. Okay, average hourly earnings 0.4%. That's inflationary. We're seeing wage growth pick up. It seems like everything is picking up. We're seeing employment change. Like, well, this is Canada right here. Yeah, but wow, this is a very strong labor market. And we see that even with the private payrolls, it's 229,000 jobs added up. This is different than the actual general non-farm payrolls of 272,000. So this is a very strong number. I'm assuming yields, treasury yields are spiking to the upside. Let's see what US 2-year yields are doing at the moment.
Also you can ask yourself, why is it that strong, the job numbers? And there's reasons behind why. Like, you have to tear into the report to see why. Oftentimes it's because of migrants also getting jobs. Like, that's what those numbers are for too.
Yeah, it can also, represent, there could be plenty of reasons, but then one of the reasons could be, of course, we had a surge of migrants, come in, and some would say that some people would keep them off the books because they're not, they don't have a license or an ID to work. But in many cases, like when some of these surveys are taken, they're just looking at jobs growth, like how many positions or jobs growth they created. And, it could be likely a possibility that, some of the migrant population is included in these non-farm payrolls numbers. But also, you may have people taking on more part-time jobs. So then that was a very strong number. So then what this suggests is that the Fed is in no place. There is no justification for the Fed to pivot and consider cutting rates at the moment when we see the economy is still expanding, when we see the labor market is still pretty tight and pretty strong, that we can expect the Fed to keep rates higher for longer in order to quell growth, to quell inflation, to cool the economy. Because that's the only way you can get inflation back to its 2% target, is if you crush growth and you find a way to cool the labor market. That's the only way. So then this is pretty interesting. So we're seeing dollar strength. This is the US 2-year yields right now, which is a reflection of interest rate expectations. This is popping to the upside.
So the dollar's popping to the upside. US 2-year treasury yields are popping to the upside.
Let me just do this.
That's
something else. Okay. Let me do Dixie right here.
Yeah, we was on the Dixie first initially. That's popping to the upside. So
you remember that was analysis, the break and close and a retest of this level. But the way this displacement is, we may not even get a retest all the way back here unless the volatility.
Yeah. Well, it's breaking this neckline right here. This is a 4-hour bottom. And you go to the 4-hour chart, you can see that it actually broke that. That's really what I really wanted. From a technical perspective to happen.
So then it may retest this area.
Yeah. Pull back and retest.
Yeah, what was once former supply would be, future demand.
Yeah, or support.
Or support,
resistance.
Becomes support. Yeah. So then, wow, this is what we see happening here. So then this is the reason why the macro data is important. Even though as traders, we really rely on technical analysis more and price action and looking at our charts. But you need to be aware of times like this where there could be huge shifts in perspective, where we see these instruments, these asset classes rotate and change bias just due to one news that comes out, one particular news. So then right now, what this is letting us know, that the Fed is diverging away from the other central banks. While we see the Bank of Canada and the ECB cutting rates, we're seeing the Fed's going to hold to a more higher for longer. So then this is definitely going to hurt the Japanese yen, the Bank of Japan. This is going to also serve to hurt other emerging market economies or economies that are still developing. Because an expensive dollar,
when you export,
exports inflation across the world. When you have a strong dollar and these countries are sort of demanded to trade commodities in US dollars
and trade in US dollars,
and trade in US dollars, and that makes it expensive for them to do business. So then what we may see happening is more de-dollarization and more deglobalization down the pike. If the US dollar remains firm and strong, you may see other countries look for alternative ways to trade using other currencies, using metals, buying oil and gold or whatever, and we're hearing talks about that now. This whole bipolar or multipolarity taking place, this whole deglobalization where we don't see the Western NATO type of imperial like influence that we see where countries choose the dollar and everything is surrounding the dollar. We're now seeing other countries look at alternative ways to do business outside of the US dollar.
Yeah, because this spike right here may signal good news for us, but not good news for them. like as far as the consumer.
Yeah,
like it's really,
well, yeah, it's a strong dollar,
Yeah.
but you got to realize how this is going to hurt the economy as well, because that's the whole point. They
Yeah,
want to
well,
keep
yeah.
interest rates high to make sure mortgage rates are high, so you won't get too many people wanting to buy homes because the mortgage rates are too high. And also, if interest rates are high, you won't see too many people selling their homes to get new properties, because when they had to refinance for a new property, they don't want to do it at a higher rate that they're already locked
Yeah.
in at.
Yeah.
So then it's going to, so, you know, it's designed to cool the economy, but a strong dollar is always good for our pockets as U.S. consumers. Is good when it comes to spending and buying, but at the same time, it's going to still slow down growth.
Yeah, they're gonna be that loop effect, really.
Yeah.
Yeah.
So then that's what we see here. So then I guess I don't know what to do, because right now we just have to wait to sort of see what the dollar may do. So what I'm going to do, I'm going to pass the mic over to my brother Melvin, and he's going to close out for the session. May talk about equity stocks.
Yeah, I'm gonna talk about some other stuff. So then, all right. So then, right here, this makes a lot of sense. So then, really, this is the move that you know, we were really anticipating, but this bounce looks like it's going to continue for a while. It was so strong, parabolic. Typically, what you want to see price come back and retest this area, and then from there you'll typically see price bounce up. So then let me just delete this right now. We don't really need this right here.
Yeah, you know, Mark, yeah, I didn't see your questions. I apologize. Like, I know Mark shared a few questions. Yeah, that's why you have to turn on the audio notification when you do the platform,
Yeah.
so you can be alerted. Yeah, but yeah, like I know he has a few questions, you know, right there. Sorry, which site was that? Well, yeah, we went to two sites. We went to tradingeconomics.com, and then we also went to finviz.com, financial visualization. Yeah, I don't know if you can type that, Melvin. Just do www.finviz.com. That's where we get our heat maps.
Okay, and then you said trading economics.
Yeah, well, tradingeconomics.com.
Yeah, but FinViz is one that we use often. So then you can definitely go there to get an idea of what your bias could potentially be. But please note that bias can change. You know, things can change like in a matter of minutes, just like what we saw with this announcement. It may change some things.
Okay. So yeah, the next question is: Should we
look to see
gold and silver spike up? Well, there's a possibility it's sold off.
It's sold off, which is it works technically, and I'm going to show you why in a little bit, because that's one of the ones that I definitely wanted to talk about. I realize copper is down. Often it does its own thing. You know, all right. So then, So then this is what we see in the dollar. We definitely see, you know, the dollar in this bullish position or predicament. Now what we're going to do, we're going to look at gold. Let me just open up a new window, and then what I'm going to do is put gold to the left. We can either look at gold futures, or we could look at XAUUSD. Let me first go to let me go to the weekly first, and then let's go to gold. And maybe I should just do this from here. XAUUSD. Okay. All right. So then this is gold right here. We're currently looking at the weekly chart. We can see here that price did expand, and it looks like price is in this period or phase of consolidation now. But let me yeah. Okay. So then, you know, we see that we have this weekly expansion. What we're really expecting is topping on the daily chart. That's what's happening sort of right now, because after every major impulse, you'll typically see price start consolidating on the daily. But anyways, what I'm going to do is, for the sake of this, just define this area. This is our area of resistance. And then we do have this area, which could function as an area of demand. So then what we're going to do right now is drop down to the daily chart to see what's happening. Okay, For some reason, it's not showing up. Let me, I don't know why. Okay, and let me make sure this is visible as well. All right, go down to the daily. Okay, so we can see here that we're in this consolidation phase and price wants to definitely snap down. I believe the strong US dollar is pulling on gold right now. So right now we can expect price to push lower into this zone. That's what we're anticipating now. A push into this zone, and then from there we'll see what happens. Either price could consolidate again and break higher, push higher to maintain this zone, or we could see price expand lower. So then, in other words, we could either see price come down here, consolidate on a smaller time frame and then push up, or we could see price break to the downside and retest down. So then we'll see. Only time will tell. But for the most part, what we want to do right now, we want to pay attention to this section right here. This section right here, because I'm trying to give you guys the keys to properly doing technical analysis. We can see that ever since this strong candle right here, we've been really in a sideways range, pretty much. Where this is the high, where this is the high right here from this candle, and then down here, well, we did have the low down here. Price had a difficult time breaking that low, but it looks like we're going to see a break of this low right here. But for the most part, it's been, within the range. Gold, it's been within the range, and we could definitely see a breakdown in the smaller time frame. So then what I'm going to do right now is go down to the 4-hour chart to show you how that looks. So let's go down to the 4-hour chart. Okay, so right now we're looking at the 4-hour chart, and we can see that we've been in this range for a while now. And yeah, and what we could do also is we could let me just draw this in, draw in this demand. Let me just call this 4-hour demand. And then we did have some 4-hour supply, right around here, some 4-hour supply. And I'll just, for the sake of, just put that right here. Okay, so what we see right here is that price is trapped in this range. We have this strong displacement now. There's a likelihood we could see price break this zone, this first 4-hour structure zone. And if that is the case, then what you can do is simply look for a shorting opportunity on a pullback in price. So you could wait for price to break this level. Let me draw this in. We could wait for price to break this level, and then from there we could look for a pullback. We can look for a pullback, and then another opportunity to go short. That's something that we can definitely look forward to for gold right now. So I'll keep my eye on it. We'll see what happens. Gold may want to bounce and respect this support as well, and then give us another pullback opportunity, because we could see this where we have what? Let me just see if you guys can identify this. Let me pull out the marker. Oh, where we have boom, 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 boom. And if price corrects up here, we can have something like this, another sell-off. And what is that called? If we do have that, what is that typically called for those who do know? We have this right here, and price corrects and forms this right here. What is that typically called for those that do know? What pattern is that called? What classical chart pattern are we referring to? Yep. Okay. Naomi said it, a head and shoulders pattern. In this case, it'll be like a head and shoulders continuation type pattern where we're expecting price to potentially sell off. So then that can happen as well. So then there's two scenarios that can take place. Either we get a break of this structure and then another pullback and then another sell off, or we could see price correct and form what we think may be the right shoulder of a head and shoulders pattern. We have the left shoulder right here, head right here, and then the right shoulder right here. We could see something like that, and then price could eventually sell off. So, you know, we'll see what happens, but yeah, this is how we're analyzing things for gold. So, you know, we'll keep a close eye on it and see what happens. But we are testing this area of demand, so just be careful. But with the way this displacement is, there's a likelihood we could see price just smash through this demand and then encounter some support at this next demand. And then that's when we can look for a pullback sell opportunity. But yeah, that's for gold. Are there any questions about gold before we move forward? All right. Okay. So yeah, we don't have any more questions. So let me go through a few more assets and then we'll just call it a day because I don't want to take too much of your time. Okay. So let's do something simple. Let's go and do, well, for one, let me okay, I didn't really look at these before, but I believe it's important. Let's look at these indices. Let's go to these major ones. Let me do the NASDAQ. Well, for one, let me start at the daily, and then let me go to I'll just do NQ. Okay, because I'm expecting those assets, the indices, to sell off as a result of that news. So all right, so then we see that. Well, let me go to the weekly. It could be better if we go to the weekly. Okay, so right now we're looking at the weekly chart. We see that we had this nice smooth transition up or expansion up, and correction, and then another expansion. And right now I'm expecting price to possibly rotate like right around here. And there's reasons for it, but we could actually see price beginning its rotation, and we'll see a lot of that on the daily, where you'll probably get price to maybe correct lower and then push up and then have another push down. But for the most part, if we look at the daily, we just finished this strong expansion to the upside. There's a lot of demand down here. You have to definitely pay attention to that. So then what I want to do is definitely draw that in. We know that there's strong demand in this area. And let me just make this daily demand. But yeah, we're in the middle of what could be a correction in price or a rotation. So anyways, but yeah, we're at the end of this impulse. So then what we're going to do right now is drop down to the 4 hour, and this is what we see in the 4 hour. We still see that the 4 hour has a bullish environment, but we have to be careful with this, because if price closes like this, which will be in about an hour, if we have this type of candle, then what you have is what you can consider to be sort of like a mother bar that defines the range, where you'll have a high right here and where you will have a low down here. We still have to wait to see how this candle closes. We can't assume anything yet, but what we do have is this interesting candle that is forming right now. We'll have more clarity once this candle closes. But if this candle closes like this, then we know for certain that price may maintain a range. And what we could see is something like this, where price will eventually come down, retest this area, maybe consolidate in it a little bit before it snaps down. Because when you have a candle like this, like a mother bar, like a long candle where it defines a range, typically you'll see inside candles follow that. Candles that would trade within that range of that mother bar candle. So that could potentially happen. for a NASDAQ. And that's why we have to be extra careful, especially after a particular news announcement, because anything can happen. But if we are going to go short, then what we can do is simply wait for price to break this level to the downside, or pretty much we should wait to see how this candle closes. In all seriousness, we should. But anyways, let's draw in our levels. So then right here, what we can assume is that there is supply right in this area. You can call this 4-hour supply. And yeah, we'll be waiting for price to in other words, we're not going to buy yet until we see something like this. Boom, boom, break of the supply, come back, and this is when we'll look to buy. So we'll buy on the retest. That's when we'll look to buy. Right now, we're still in a bullish environment, but on the 4-hour, we have all the supply up here. There's a likelihood that that we won't get the break above this high, even for today. So, we'll just keep our eye on it. But let me go down to the 1-hour. Okay, this is the 1-hour. We see this range also on the 1-hour. And we have 6 minutes, 6 or 7 minutes until the close of this candle. So then we can define this range now. We see the strong, this nice mother bar right here. We can sort of define that range even on the 1-hour. So you want to trade the 1-hour, you can. We'll see how this looks after like 6 minutes or 7 minutes. But yeah, nice range formed. So yeah, makes trading a lot more interesting. And yeah, we'll see. But yeah, so then this is the NASDAQ. All right. So then what else do I want to look at? I believe all of them are doing something quite similar. Let me look at the Dow, and then I'll call it quits for today. As far as with the session. So then let's go to the Dow for futures. That's YM. Oops, let me go. YM. All right, so then this is the Dow, and we're currently looking at the daily chart. We can see price sliding lower as well on the Dow, and it's been in this range for a while. Let's go to really the monthly chart to see why we're in this range. So we see here that on the monthly chart, we went through this expansion, then price corrected, and then now we're in this expansion right here. This is a monthly expansion. Stochastic is overbought. So then what we can expect is topping or consolidation on a weekly time frame, and that's exactly what we saw. We saw price create this range where we had the low right here, and let me make this red so we know that this is a higher time frame range. And let me make sure this is visible. Yep. Okay. And then we had the high right here of this range. This is the candle that will be considered the mother bar that created and defined the range. So we're in this range, and if you go down to the weekly time frame, you can see that yes, we're in this range. Price is ranging or topping, whatever you want to call it. But for the most part, if you go down here, we see that price is encountering some demand down here. This is what we call weekly demand. And let me just change the color. I don't want to have the same color. Let me just make this color. But yeah, we have this weekly demand right there, and we have this weekly supply up here as well. But I'm not going to draw that in. Let's go down to the daily. Okay. All right. Yeah, this isn't being visible now. Let me make sure this is visible. I don't know why it doesn't show up, but yeah, let's go to the daily. All right, so then right now we're looking at the daily, and we could see here that price did react from this zone, and is finding some supply right now in this area, but it's in an interesting position because there's both supply right here, there's supply, and then there's also some resistance right around here. There's some, well, let me push this up a little bit higher. And this is what we call internal demand. Internal demand. You'll see this a little bit better on a smaller time frame, like the 4 hour. Maybe I should just draw it in on the 4 hour because you'll see it better on the 4 hour. Because on the 4 hour, we can see that this is an area of demand right here. So let me just make this 4 hour demand. Yeah, so this is 4 hour demand right here. So then, you know, there's a possibility we could see price react to this level and push up. But for the most part, you know, we're in an interesting phase, even for this particular asset. We could be seeing another leg into this area, another bounce before we see another fall. In other words, we could see price make another leg up here before we see price fall lower. So yeah, this is for the Dow. This is what I think could potentially happen. So then yeah, we'll see. We'll see what happens, but yeah, upon the announcement, we saw a sell-off, but now it looks like price wants to maybe bounce higher. Who knows? You know, we'll see. But yeah, that's it, guys, I guess, for today. You know, I don't want to overwhelm you with too much, but I hope you guys got something from today's session. Thank you guys so much for coming to today's session. We really do appreciate you guys. I hope you guys learned something. I hope you guys got something from today's meeting. And are there any questions before we call it quits? You know, I just want to go and, you know, ask that question before we shut things down for the morning. Any ideas? Yeah. Any idea, anything that you want us to look at, any assets, any stocks, any commodities, any currency pairs, anything you want us to look at, now's the time for you to, you know, ask whatever question you may want to ask. All right. Thanks, Mark, for chiming in. You really appreciate that. Okay. Thanks, Robert. All right. So yeah, I guess there really isn't too much, but yeah, thanks, Naomi. Yeah, I guess we can end today's session. Thank you guys so much for coming. Remember to always count your blessings, not your pips. And we will definitely see you guys soon. We hope you have a wonderful weekend, wonderful, blessed weekend. And remember, we're entering summer trading soon. Really, you can see a little bit of it sort of forming, but it hasn't really formed that much. That should happen maybe in the middle of July or end of July, or maybe August. Yeah, well, yeah, we don't know because we're in a different environment right now. Yeah, election, geopolitical year. So we may maintain some volume in the market. But other than that, it's been an interesting 2024 thus far. And I hope you guys are using good money management and risk management. But yeah, remember to always count your blessings, not your pips. And we will definitely see you guys soon. Stay encouraged, stay blessed. And yeah, we will talk to you guys later. All right. Have a wonderful rest of your morning, and we will talk soon. All right. Okay, then bye.